Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up for this Thursday, the 12th of September, 2019, just after 4:30 p.m. Central Daylight Time. Was today a watershed event? Very well might be. It actually could have begun earlier in the week with the firing of John Bolton. Let me explain. Not for 1 second do I believe that President Trump has moved back the tariffs for 2 weeks so that President Xi and the Communist Party can celebrate their 70th anniversary without new tariffs hitting them. There's more to this. So you get rid of the bulldog, and I think I say that in a nice way, by the way, because that's what John Bolton is known for. He's the man you let loose. President Trump may have decided that a bunch of small wins are better than trying to go at the end of the road for everything and do it all at once. Too difficult. So take a series of small wins, you know, how you make them stack up, and each one may say they stay in place as long as we can get to the end of the road. When China today said that they were looking at pork and beans, in other words, buying U.S. pork and soybeans, yes, limited quantities, but buying them in a bigger quantity than they have. And if you don't think they've been buying them, you're wrong. They have been. It's been kept much quieter than you can imagine, but they've been doing it, but now they're talking of doing it. Well, that move, of course, helped the stock market initially. It couldn't hold all the gains that it held. The dollar reversed course today, and we saw Europe do something that's another watershed event. What took place in Europe is Mario Draghi decided to make the move in going back to quantitative easing with an unspecified period of time, cutting interest rates moderately, giving a tiered program to the banks so that they don't pay on as much of the reserves as they were to the central bank. And it goes on and on. This is a watershed day in, I think, what Europe did in the U.S. Now, why Europe? Because those events mean that they're doing things to make their economy grow. We're doing things because everybody else got so weak, and our Fed is doing the insurance policies. Do you get the differences? If you don't, I don't know how to say it any different. So I think you're getting that. And the metal markets are looking at it, trying to figure out, what do we do next? Do the metals, the base metals, run because this could be better down the road? Does the gold market look at it and say to itself, okay, things are still bad, I should go up? Or does it say, wait a minute here, what's going on? Do I deserve that type of bid? Are traders still going to buy me? We don't know. What we know are the events I just said, and you have to trade them appropriately and try to figure them out. And appropriate is such a hard word because I don't even know what that means when you're a futures trader. What I can tell you is we've been in a correction on a closing basis since we hit 1526.60 on the weekly charts. We're down roughly $26 from there. When we look at the price action, you've got a trading top in place here. The market's fighting right now to see if this is going to be a trade bottom. You can see how the market, while it closed higher today, it gave up the lion's share of the gain. It finished at 1507, but it had gotten up to 1532.20. It didn't hold the gains all that well. It'll take very little for this market, if it wants to come down, and have lower highs, lower lows in it. If it rallies, no matter what it does, if it still keeps going up, it doesn't change the pattern of a higher high, lower low. Now, the resistance. Gee, I'm not surprised of where it stopped. Take off today's action. What we've been talking about is we thought that down here in the lower Bollinger Band, you'll see it in a moment, that could be where the market starts finding its support. Go to my gold report. It's my video on our website under Education. Then you'll see Ira's Metals video. Take a look at it. I think it disappears after tomorrow on the website, but it'll give you an idea what I thought could happen. The market rallied today, hits that 18-day average. That's my line in the sand, and it's stalled out there. It doesn't mean it's ready to go down or up yet. It, from the break point, rallied back, and it got itself back into balance. Here's your Bollinger Band. I'll still stick with what I had said. I don't know if it's going to break from here or not. The setup isn't one yet to just go from a low to a high. I don't see that at all. And I don't see a trend. I see a lower low and a higher high. I see momentum is oversold, not even beginning to try to embed where you convert from oversold to locking in a bear trend. When I step over now to GLD, We didn't quite make it, and we had talked about this the other day. Let me come over here. That it didn't quite make it to the lower Bollinger Band in an oversold condition. This is yesterday. If it breaks down, great. That would also give you a downtrend. But instead of doing that, it keeps the pattern of a higher high, a lower low. Its 18-day average is right there. You go to it and you stall out. Again, you're not trending. When we get over to GDX, GDX is the weakest right now. It's got an outside day down, closed by the day's lows. That puts it into a downtrend. Lower highs, lower lows. If you take out today's high, tomorrow, be it Friday or Monday, then the 18-day average becomes a logical objective on the market, and that would put you into one of these ugly chart patterns. If it drops from here and hits the lower Bollinger Band, via that it's already oversold, I would not be surprised to see it gather support down there. In the gold-silver ratio, it is still favoring silver at this point. Yes, silver lost a little bit to the gold today, but overall you're staying under the 18-day average of closes of the differential. You've gone from 93 down to nearly 80, and now you're back to about 82.90. In the silver market, you've had a pattern of a higher high, lower low. Once the market gave up the upper Bollinger Band, it pulled back, and it's now, I think you'd agree with me, for 4 days been fighting at that number. Momentum is still pointing down. Should it get under 1785.50 and close under that, it could be a problem. But I would expect, and I wanted to see today actually a lower close, because then if the market took out today's high, you'd have the possibility of the way it would have set up higher lows, higher highs. You're not there yet. You're just fighting a battle at the 18-day average of closes. In the copper market, this is how you looked coming in. You had a higher high and a lower low. You can see that. Nobody knows that China and the U.S. are doing these things behind the scenes. If the market rallies, I'd look for the upper Bollinger Band to be resistance, and if it exploded for any reason, the 100-day average. It got up today. First goes down to what number? 259.00. The 18-day average is 258.85. So it gets an outside day up, stops right there at the upper Bollinger Band resistance, and turns the trend back up unless you take out today's low. That's interesting work too. In the platinum, higher lows, lower highs. Remember what I said, this is in a stall period right now as you're working off the slow stochastic. Yesterday, I know what I said. I said the strongest looking chart was the palladium market. You tell me how that chart looks to you. $48 higher. It left every other metal in its dust. And the reason it's the strongest is the embedded reading. I'll hang my hat on that. Until it's lost, it's got the power. It's probably overdoing itself trying to stay over the upper Bollinger Band. But you're also making new highs on this whole move. This market has taken over leadership again in the metal complex and in the dollar. I love when this happens. Here's the dollar in an uptrend. What's the objective? First off, do you want to go through the European Central Bank report? Can't answer that. That's up to you. Second, if it does rally, where do you think the market might encounter its first resistance? Come on. That's how we do our webinars when we have them. Ready? You go to the upper Bollinger Band and bang, you collapse from that position right on down. You finish the day out at 9830.8, under the 18-day average. So the bias is down, the trend is still up. You have hit an upside target. The smart money, in my opinion, got out today. Now if the market gets under 98.10, you step out of the uptrend and you have momentum turning down. So you put it all together, you got to come up with the game plan, and that's what we try to give you. Via the research that we put out here, and you have two ways to get the research. If you haven't seen mine, when you go get this, you'll see our free offers. You can sign up if you haven't had it before. If you've had it before, believe me, I keep records. And I don't send it out again. You can subscribe. I love that. You'd love it because I think you'll see a different idea on the market. You don't have to stay with it. We're not asking you for contracts or anything. But you're welcome to sign up to see both the Linn research and mine. Go to www.iraepstein.com, hit the free offers. Call my staff if you want in the morning. They'll be here again. Or you can click right here. It'll take you right to that page. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.